the Nikkei 225 average stock price, Nikkei index, the representative stock index of the Japanese stock market, plummeted on March 11th. It fell again below the peak during the bubble economy. On this day, the Nikkei index closed at 38,820, down 2.2% from the previous day. At one point during the market, the decline rate reached 3.0%, recording the largest drop this year. As a result, the index fell back below its peak during the bubble period. This index exceeded the highest level during the bubble game in 34 years and 2 months on February 22nd, and then exceeded 40,000 for the first time in history on the 4th of this month, but has fluctuated since then due to the influx of borderline items due to the short-term surge. The highest point during the bubble economy was 38,957, recorded during the day on December 29, 1989. At the time, the index closed at 38,915, setting the highest recorded during the bubble economy, even based on the closing price. Stock prices reflect future expectations as well as current corporate performance. A warm wind has blown in the Japanese stock market. The Nikkei 225 average stock price, Nikkei index, the representative stock index of the Tokyo stock market, broke the previous high recorded during the bubble economy period in about 34 years and 2 months on February 22nd. On March 4th, it surpassed the 40,000 market for the first time in history. The Nikkei index growth rate this year reached 18.6% as of March 8. The Kospi's representative index of the Korean stock market rose 0.9%. The 뉴욕증시에서 닛케이신문 reported that this was influenced by the fact that the Nasdaq index, one of the representative indices of the New York Stock Exchange, hit an all-time high on March 1st local time. As the artificial intelligence, AI, and semiconductor industries rose in the New York Stock Exchange, the Tokyo Stock Exchange was also affected, with semiconductor-related stock leading the index rise. Since the 1990s, the Japanese economy has been suffering from long-term stagnation. As in the phrase lost 30 years, which simply describes the situation after the bubble burst. Accordingly, Japan's gross domestic products (GDP), which boasted the world's second largest GDP for a while, after successfully revitalizing each industry after the Pacific War, fell behind that of China in 2010. In 2023, it fell behind Germany and fell to the third place in the world. in the Japanese stock market. There were also voices of concern about the recent steep rise in stock prices. This is probably because it is still difficult to be confident that the Japanese economy will escape the long-term recession. In fact, the solid performance of Japanese companies last year was in no small part due to the weak yen. The weakening yen is largely influenced by Abenomics, the economic policy of former Prime Minister Shinzo Abe, who returned to power in 2012. Abenomics is a policy that seeks to escape deflation and revitalize the economy using the three arrows of monetary easing, fiscal spending, and growth strategy. Among these financial easing policies that are unprecedented in the world, such as negative interest rates, are currently in progress. Under normal circumstances, it is a policy that cannot be prescribed due to concerns about side effects. It is clear that the policy of issuing currency to cover government bonds is not sustainable. Accordingly, at the beginning of its introduction, it was difficult to predict that it would continue for such a long period of time. However, the Bank of Japan appears to be slowly seeking an exit strategy. Expectations are spreading in the financial market that the Bank of Japan will lift negative interest rates in March or April.